Roy Smith is our corn and soybean market analyst this week. It was a lively end to 2015 at Argentina's ports. Bloomberg reports the country shipped so much grain and oilseed in the final days of the year that it doubled the amount exported during the whole month of November. Policy reforms there helped move stocks, but Reuters says the government was disappointed the volume wasn't higher. Here in the States, the U.S. Department of Ag is preparing to release its January crop report. Those estimates are slated to come Tuesday at 11 a.m. Central Time. We talked with Roy the afternoon of Wednesday, January 6th, and started by recapping current price movement.
First of all, it's been very disappointing that we really didn't get much of a dead cat bounce. You know, one day we had a market that actually followed the criteria for the dead cat bounce, but then the next day it was gone. And I don't know whether you consider that a true move or whether that was just a hiccup in the markets, but very disappointing. And we've got the prices of corn and soybeans both at levels that are not going to make anybody any money, maybe preserve some cash flow, but that's about the best we can hope for.
What are your impressions based on long-term charts about where both these markets might go?
It's real easy if you look at the long-term charts to get kind of bullish in the corn and soybean market both. And the charts that the university extension people did for those marketing workshops we had in December, you look at that and you see in both corn and beans a gradual uptrend starting around the 1st of October and going through approximately the 1st of April, sometimes a little further and sometimes not quite as far. So you look at that and you say, wow, there's a good chance that we're going to get a rally just based on the seasonals. Right now it's hard to see what would cause that, but you know, it may just be such a thing that we've run out of people to sell. You know, the speculators have sold all they're going to, and the hedgers have sold all they're going to, and sometimes that's all it takes, and we hope that's the case this time.
If you don't have to sell then for short-term money needs, would your thought be then to just kind of ignore the markets for a while and wait?
I think so. You know, we raise the crop to sell, and we need to generate cash flow. Everybody is going to need to generate cash flow, if not to pay the year-end bills that we had here, at least going into February, March, April time period. We're buying fertilizer and buying chemicals and so forth. So, you know, I hesitate to tell anybody don't sell anything, but right now, if you've got your cash flow needs covered for the end of the year, then I say, yeah, you're right. Don't sell anymore until we give the market a chance to work.
You do have one rule though that you follow, and that's not to sell beans in February.
Right, and that's a well-known rule and one that I stick with until it proves me wrong, like the dead cat bounce did. But year in and year out, February has never been a month for the highest price of the year. There's just the psychology of it. I mean, you look around here and we got a lot of snow, let's face it, and we're not moving anything, and the speculators maybe have gone south. I don't know, just grasping at straws here, but year in and year out, the month of February has never been the highest price of the year. And I don't see any reason why it will be this year, because we're at a point where it's difficult to go any further down than what we already have.
Historically, does that January crop report, which comes next Tuesday, have an impact on the markets?
Well, you'd sure think it would, because it is a measure of how much the harvest has been and how much we've got in storage. But if you look at those long-term charts, it's real hard to see any cause and effect. And you know, I guess my thinking is that if you need some cash flow, chances of prices, corn going up a nickel or a dime are not that remote. The same with beans. Odds of the soybean price going up 10 or 15 cents. You know, that might be a place to make some sales if you really need to generate cash flow.
You mentioned those workshops, and I read about that in your article on agriculture.com as well. Do you find a renewed interest from farmers to come in and think about making a marketing plan?
We had good turnout at the workshops that we had before Christmas, and yeah, it's hard to be real optimistic right now, but we're going to be farming next year and the year after that, and so one of the things it's good to do this time of year is weigh your alternatives. You know, what are the possibilities? Do I want to sell forward contracts? If so, when do I want to sell them? Do I want to buy put options or implement some kind of option strategies? And we've got time to work on that now, and time to consider the alternatives. So I say one of the best uses of time is making those marketing plans for 2016, for the next year.